Okay, let's look at the treatment of one-off contracts, which is the same thing as a special order, whether to accept or reject a special order using marginal costing technique. Major thing for you to note is that as far as it has to do with determining whether to accept a special order or to reject it, you consider two things: the incremental revenue and the incremental cost. So when we say incremental revenue, we mean the revenue that will occur or the revenue that will be generated if we decide to accept the contract. I use the word one-off contract because the contract is unique. This is the same thing as a special order. A special order is unique. It could be in terms of sizes or the quality or in terms of the uniqueness. It's a special order for somebody who supplies bread normally, and someone asks you to supply bread with a bread that has banana. It's a special order. You supply bread of 1,000 loaves of bread every day. Now you receive an order to supply 10,000 loaves. This is a special order. It's not the regular. So that's why we say it's a one-off. It occurs one-off. So if it's a one-off, the two things you must consider: what is the incremental revenue? That is, what will be the pay you receive to deliver this job, and what are the incremental costs. Now, when we talk about the incremental costs, we are talking about the marginal cost. That's where the marginal cost technique comes in. And you know that what makes up your marginal costs are all your variable costs. Your marginal cost is made up of all your variable costs plus opportunity costs or incremental fixed costs. Incremental fixed costs, that is additional costs fixed costs that will occur because of this one-off contract that has just come. Your variable cost is made up of all your variable material, labor, and variable overhead. So let's look at a question to buttress how this works, how to use a one-off contract. So this is a special order. We have a question here. So this is a special order. We call it acceptance. So rejection of a special order. So this is what it is. So we have to, let's look at a question. So when we look at a question on this, look at the question we have before us. Look at the first one. It says Human Rights Limited. You can always screenshot it. Human Rights Limited produces and sells for 25,000 naira a bag of rice for which there is heavy demand, which the company is prevented from meeting because of shortage of skilled labor. So this company normally sells bags of rice. So they are not able to meet demand in the market because they don't have enough labor. Now, direct material and labor cost of bags have been given to us. We have been given the direct material as 10,000 naira and 5,000 naira respectively. That's cost for a bag. So the labor force is normally paid 1,250 per hour. All other costs may be regarded as fixed. The company has invited one of the company has been invited by one of its European customers to supply for 2,000 naira a batch of rice of modified design and capacity which the customer wishes to incorporate into his own product. Human Rice Limited accountant has calculated that to execute the order, 200 direct labor hours will be required and cost of material would be 850,000 naira, excluding the cost of special bags which could be bought in for 100,000 naira or alternatively made by the company for a material cost of 40,000 naira and labor time of 20 hours required. Advise the management of Human Rice Limited whether to accept the European order. Your answer should be supported by relevant calculation and should include comments or any other matters which you consider should be taken into account. So from this question, let me just summarize the question. The company normally produces bags of rice which they sell each for 25,000 naira, and they gave us the cost in the second paragraph to produce a bag of rice, which is they need material of 10,000 and 5,000 respectively. But now they have received an order from an European country, a customer that is in Europe, that they should supply a special modified design of rice for 2,000 naira. 2 million naira rather, for 2 million naira. So we are now told for them to execute this order from the third paragraph, or fourth paragraph rather, for us to execute this order. Human Rice Limited accountant has calculated that to execute the order, 200 direct labor hours will be required, and the cost of material would be 850, excluding a special bag. So let's quickly calculate. So should we accept this contract or not? Quickly look out for what is your incremental cost, incremental revenue, which is written in the question as 2, we are told is 2 million. Then what are incremental costs? We were told our incremental costs, like I said, your incremental cost is just your marginal cost. Sometimes you might have opportunity cost, sometimes you might have incremental fees cost. Sometimes you may have both, or you may not have any of them even. But at least all your variable costs definitely will be there. So let's look at our variable costs or our marginal cost. First of all, we are told in the question that we will require 200 hours of labor. So for labor, we need 200 hours. And we are told in the question that for each hour, labor is paid 1,250. 1,250. Then we have material. All this material is a variable cost. So I don't need to waste time. I just move straight to calculate what are my variable costs. Material, we are told, okay, let's take it straight. It's this single figure, 850,000. It will cost the material 850,000. The 200 multiplied by 1,250, you give us 250,000 here. Material. Then the special bags, we are told also we need a special bag. Now this special bag, we can buy it for 100,000. We are told we can buy this special bag for 100,000. Or we can make it ourselves. Now, what is the cost to make? We'll do some workings here. cost to make a bag. We were told in the question that for you to make a bag, you will need 20 hours of labor. So the same thing, even to make the bag, you will need to calculate. It is all the incremental cost that will be incurred to make the bag, which is labor, material, maybe if there's any opportunity cost, even variable overhead. So here we have labor, 20 hours is required, and 20 hours, each hour a laborer is paid 1,250, which will give us 25,000. The material, we say we need material worth of 40,000 naira to produce the bag. Then another one thing again very important you must note is that labor are in short supply. Already the company cannot even meet their normal demand, like the question said, there's shortage of labor. Company cannot meet their normal demand, and now we are diverting the labor we have, the labor that's in short supply, to go and produce a bag of, to produce this special bag for the rice. So by diverting them, it means the revenue they are generating from the company will be lost. So we need to calculate what is the contribution generated by labor. Contribution generated by labor. Now labor is calculated per hour, so it means for every hour I move a labor, since we have shortage of labor, so there will be no replacement. What it means that for every hour I move labor out of their normal job, how much were they generating? So how much is being lost for not doing their normal job and coming to do this? That's what we will consider. That's what we call the opportunity cost. So the revenue they were generating, or the contribution they were generating, will be lost. So what is the contribution they were generating? So which is an opportunity cost. We are told treatment of limiting factor. So let's look at, there's one limiting factor here, which is labor hours. Labor is calculated in hours. So first of all, for you to be able to know how much is lost, you need to prepare the income statement of the company. So if I prepare the income statement of the company, I'll be able to tell if we are making, so this is the income statement of the company. We are told that selling price, which is sales, is 25,000. Less variable cost. Less variable cost. And in the variable cost, we are giving variable costs for both. We are giving variable costs for labor and material. So for labor and material, the variable costs are, we have variable cost labor. They say it's 10, I think it's 10,000, yeah. 10,000. Material is 5,000. Oh, it's the other way around. It's the other way around. I think the material is 10,000. Labor is 5,000. So total 15. Deduct this from, you have 10,000 as contribution. So what is the contribution generated by labor? Now remember, labor is measured in hours. So how much per hour is labor generating? So that would be contribution per labor hours, which is what we call contribution per limiting factor. Because the limiting factor, what is limiting a company from producing more, is the labor, and labor is measured in hours. So what is the hours here generated? So if the question had said material, it would have also been contribution per material. Material, what is the material required per unit to produce 1 unit? Here, if assuming the lecturer did not, or the question did not mention the kilograms, it would just be that each material costs 10,000. But if they mention kilograms, you now need to calculate how many kilograms are there in 1 unit. In this case, now we are told labor, and we are told that labor is paid 1,250 per hour. How come we are using 5,000 here per hour? Per unit. It means there are more than one hour used in producing this 1 unit. Remember, this selling price. This is selling price. Also, this is variable cost per unit. So, which means this 5,000 naira of labor means there are more than 1 hour inside. So, which you generate, which means it's supposed to be how many hours times 1,250 will give me 5,000 naira. How many hours are there? So that will be, the hours will be 5,000 divided by 1,250, which will give me 4 hours. What it means is that there are 4 hours here. So it's supposed to be 4 hours times 1,250 will give me 5,000. So what it means is that contribution per limiting factor, which is contribution per labor hours. Contribution per labor hours. Contribution per labor hours, or by limiting factor, which is hours, will be 10,000, which is the contribution, divided by limiting factor. Limiting factor here is labor hours. Labor hours here is 4 hours is used. So how much is contribution to each hour? Divide this by 4. We have 2,500. So it means each hour of labor is generating 2,500 naira for the company. And since I'm coming to use this labor that is in short supply, I'm using 20 hours of this labor. Each hour, for every time we are using it, we are losing 2,500. So the total opportunity cost, which is a benefit forgone in the previous job for carrying them to come and produce bag, will be 20 hours times 2,500, should give us 50,000. Our total cost will now be, to produce the bag, will be 115,000. So we'll go back to the question. We are considering, here you can see that the examiner is testing make or buy inside acceptance or rejection of special order. So we'll look at the cost to make, look at the cost to buy, and we'll find out that it's cheaper for us to buy. So for that special bag, for the special bag, we buy for 100,000. One more thing, you can see that the labor here, we brought in this labor to come and produce this special rice. Normally the company produces a special rice. The company normally produces rice, but now they receive an order for them to produce a special rice, and you are now also moving labor of 200 hours this labor of 200 hours to go and produce this special rice, it means also the shortage will still apply. That's opportunity cost will still apply. Like I said, every time they mention there's a shortage of any resource, if that resource has to be used, just know that opportunity cost will arise. Whenever they mention there is shortage of any resource, just know that there has to be an issue of opportunity cost or limiting factor. So here, what is the opportunity cost of using the 200 hours of labor? This opportunity cost for this 200 hours now, so it will be 200 hours times contribution loss for per hour for coming to produce this. We have 2,500, so that gives us 2,500. That gives us 500,000. Total this, add up all this, should give us 1,450, I guess. Hold on, let me do my calculation. This should give us 2,000 million. So this should give us 1.7. So it should give us 1.7. $1,700,000. If I less this, I have 300,000. So this is our incremental benefit. So the examiner also, remember, he also asked us that we should also consider other factors that we feel what are other factors we should consider for this contract. So remember, let's put our comment first. Say the European order should be accepted. Should be accepted. Please pardon me to write should be. Okay, let's write full. Should be accepted due to the incremental profit or benefit of 300,000 naira. Now let's look at factors we should consider. So at this point, the examiner is asking you non-financial factors. What are the factors we should consider here? They are non-financial, what we call the qualitative factors. We have quantitative factor, which is the financial we've done already. Now this is the qualitative factors. We should consider. For instance, I can say one, if we to accept, what are the factors we should consider even while accepting this contract? One, we should consider, so here two people might be writing two different things. It doesn't matter. Whatever you are writing, you should be able to address this questioning we have in front of us. So it should be directed to the question you have in front of you or you're treating. So I can mention here time factor. that because we have enough time, I can say we have time to do this job. Or in this case, as this question may say, that the time factor here, there is a time factor mentioned in this question, which has to do with that there is shortage of labor hours. It's a time factor. So let's put here that we do not have enough labor hours. Which may require new hires. That's we're going to hire more laborers. 2, another factor we can consider here is the fact that accepting the order will help us build goodwill for subsequent contracts. So we'll put also, if we accept this order, this special order, it will also help us to build competence. So let's say competence or what you say capacity, like building up the capacity of the workers. So you can see capacity enhancement. Capacity enhancement. So the number 4, we can also say if accepting this order will require some special expertise. We require some special expertise. So you must consider, or you can say you just consider our expertise. We'll consider, let's put it like this, consider if we have the expertise. So they ask me what should we consider. So we'll consider if we have the expertise to deliver this job. Also, what else again can we? So you can several things can be made. So people may not be writing the same thing, but if you can pull out, even some you can get it from the way the question is. So, like we can say, we'll consider availability of the material this to produce special bag, or availability of the special bag, purchasing the special bag. So let's say availability of the first special bag of the special bag in the market, because we say we are going to buy it. So you can also go for look at other questions. I'll still post more questions on marginal costing, relevant costing as the cost as the other name be. I'll also consider solve some other questions. You can also read the introductory aspect of the question to understand treatment of special treatment of the special order or one-off contract, whether to accept or reject a special order. Thank you.